Hello everyone, Scott Jarrett here, and I've had the great opportunity in my career to work with some of the most wealthy people that I can ever imagine even being surrounded with. We started our business back in 2003 and have had the fortunate opportunity to work with large family offices, wealthy families that own sports franchises to people in the $1 billion range. I've been able to be in their back office, be able to talk to them, get to know a little bit about what they do and how they see the world in a very different way. If you think about it, the wealthy do things totally different than what's being advised out in mainstream media. Some of our clients are top end clients. I mean, majority of them are 25 million and up in net worth. So they've definitely figured things out and know how to do things differently. Our families that I've met with that are in the $1 billion and up have a different level of thinking when it comes to wealth, how they develop their children, and things that they do. So there's seven topics that I have observed, I wrote down that I thought would really help you understand a little bit about what they do that's different than what we're being advised out in the world today. So the first one is save money. So we're advised to always save money. Well, think about it this way. If we save money into the bank then uses that money to create wealth for them. So we obviously want to be able to strip money off of our businesses and other things and save it, but it's not just saving it, it's investing it. So every time some wealthy person I knew, they were always trying to put that money back to work as soon as it possibly could. So all that money was going back in. So it wasn't just saving it, it was actually investing it. So when we talk about dollar cost averaging, moving 20% of our money off our balance sheet and putting it to work, that means not just saving it, but actually putting it to investing and making it work for you. The second one was reduce spending. Reduce spending is was not really in the wheelhouse of a lot of these people. Matter of fact, just recently with COVID and all the things that are hitting, I'm seeing more businesses doubling down on that opportunity. The spending has actually gone up. They're making strategic decisions and moves to take advantage of the opportunities that are in front of them. Reducing spending was not the way it was to be thought of. It was actually looking at doubling down, looking at new opportunities, and increasing spending to create more opportunity. Even like if you read the annual report from Amazon and what Jeff Bezos and those they were doing, they were actually buying more equipment. They were ramping up and getting ready for the demand of things that were happening. If you look at some of the most successful businesses that came out of the COVID time, they actually increased spending to get themselves out of it. And I thought that was an interesting story because we always talk about, oh, we got to decrease spending, we got to save more, right? So those are two interesting caveats that I saw there. The third one was they always said, you always want to be out of debt. Well, any wealthy person I understood never wanted to be out of debt. They just wanted to have the right kind of debt. So using leverage and debt to create more assets for themselves, whether it's buying more hotels or office buildings or getting lines of credit to put money back into their business, but using other people's money to create wealth for them was a very, very, very commonly used technique that I've noticed where other people are so afraid of debt, but they don't understand the debt. They don't understand the difference between good debt and bad debt. The fourth one, go to school. So I've noticed that most successful people that are of exorbitant amount of wealth never really talk about going back to school, but they use this concept called just-in-time learning. So it was like when there was something out there that they were trying to learn or trying to capitalize on, it wasn't just like we're going to halfway do this thing. It was like we are all in it. So if we're going to create a new healthcare company, you should see how they go all in. On the backside, if like we're going to put together a private equity deal, like we're going to go invest into different businesses, it would be a 24-hour, 7-day grind of just trying to understand the mechanics of the business, and you're going all in. So the way I understood it was just-in-time learning. It's like opportunities here, and it was just all in on that to see how they can make it work. Versus, oh, I'm going to go to school, I'm going to drag it out and learn from people that, they're academia, nothing wrong with that, but it's different between being academia and being entrepreneurial and understanding how to develop something in a very, very, very strong way. Fifth thing, get a job. Well, most of these people don't get a job. They create opportunity, and they're visionaries. So they understand what the opportunity is, and what they do is they don't get a job, they create jobs. They create abilities for other people because they're creating new categories and new things. So getting a job was never in the consideration. They were trying to figure out how to create a new opportunity for other people. So now they hire people to help them execute this vision that was created from whatever it is that was out in front of them. 6, diversify. Keeping all your eggs in one basket can be risky if the business falls apart. So the trick to the wealthy was to own nothing and control everything. So diversification was, we want to own the right assets, so have a lot of in our business, have a lot of real estate, but really understand paper assets too. So there's 3 forms of assets that I always understood that most wealthy people were really good at. They either understood paper assets, they understood business, and they understand real estate. But they got really narrowly focused in those 3 areas and built big unpenetratable moats around those assets. So when things were happening, they already had a different way to go. So like for instance, Warren Buffett, he started out with a lot of paper assets buying value, but was very deep into different companies. So as they were diversified, they were very concentrated in where their risk was. And when they made those profits, they made sure they made the right diversification of what they wanted to do. But it's different than diversification that you hear from the financial pundits out there talking about like why diversification across different things, because usually that means you don't really understand what you have. So you own a lot of different stuff. So in our investment strategies, we make sure that our clients understand their investor DNA, understanding the rules for their money when it goes into paper assets, make sure they understand what their investment strategies are for real estate or for their business and how to really capitalize on it. So diversification was a very interesting way that I saw that, that's not necessarily the case in every example. The 7th one, and I've done this quite a bit myself, take vacations. We as a family, we'll have like one family vacation, but most of the time we take multiple vacations throughout the year, but they're very strategically based because they're based off of relationships. So you're finding that you're taking vacations that are associated with business trips. It's like you're going on trips with friends of yours that are helping develop and do things. And it's funny how the vacation world becomes more a business opportunity development world while you're having freedom inside of that, because you're hanging out with the people that you want to hang out with, and that energy just comes full circle. So we've done some tremendous trips around the world and have been a lot of cool spots, but a lot of them had some type of business form around them, which gives you some benefits there for taxation and all that stuff. Because I remember sitting down with my tax preparer and going through an IRS audit, and they were going through all of these different trips that we had been on that were associated with business. And I just thought it was interesting that, that I went on all these different trips, but there was some type of business component to it where I was still able to disconnect from my business and unwind, but they were still in a strategic event where I came back almost 10 times more powerful than where I was before, because either I built more relationships, I was able to grow more, and still spend quality time with our family, but they were one and the same. And I think that was something that I've noticed very much so with a lot of successful people that I'm on, that where they've gone on like Alaskan trips for something, or they've done these exotic different things with the right types of people. And I thought that was interesting. So there you have it, 7 things that I've observed that the really wealthy do that's different from what we're hearing out in the mainstream media of how to grow and become very wealthy. Hope that was good for you today. Please share with your friends, colleagues. Let me know what you think. And maybe we can expand this up to 7 to 10 to 20 different things that we can start to grow on and build as we learn to hack our future. Have a great day, and we'll talk soon. Thanks, Scott.